Okay, folks, welcome back to the Contrarian Trader. This is Robert Desmond. It's been some time since I did a video. It was early in September. A lot has happened, with the exception of the economy getting any better. For the most part, it's according to last week's economic data, jobless claims came in just slightly below what was expected, but still above that benchmark, 450,000 jobs. Mortgage applications, which is a forward-looking indicator, came in 10% below what was expected. This is during a time where we have historically low interest rates. Building permits, a forward-looking indicator, they also came in lower than expected. So is this economy truly recovering? No, in my own opinion, I don't believe it is. Then why are we rallying? Well, in my last video, you can go back and check it, I predicted that on the S&P 500 and on the RTH that we would see a rally. And it was on or about this time here. And I told my members, do not add to short positions. We need to do it on a stock-by-stock basis, because this market, the Democrats who are in charge of this government are in deep trouble, and they remain in deep trouble on state levels with governors' races, with congressional races. They're going to lose a huge amount of power, and the only way that they could really fight losing as much power as they can is to spike the stock market, so that people see their portfolios increase, thereby assuming that the economy is recovering, when in all actuality it's not. What they're doing is that they're keeping the dollar, they're keeping the U.S. dollar artificially low. And here I predicted to my members last week, or the week before, that we had seen a bottom in the dollar for a while anyway. They're keeping the dollar artificially low, and that any rally in the dollar would be met with selling in the stock market. What happened last Monday? This is a rally in the U.S. dollar. What happened with the stock market? It tanked. Then the following day they came in, the boys in the streets, assisted by the federal government, helped to weaken the dollar, and the stock market rallied, gained back all of its losses. So you need to see this for what it is. It's a rigged market. And it's okay, so long as you can be honest with yourself and admit that this is the game that's getting played, and trade along with it. Now, volume. I've mentioned this with regard to the RTH on my last video. You can go back and check it. They were rallying it on declining volume. The average volume back then was about 2.5 million shares per day. Volume, even after this huge run here, since September, early September, the volume has dropped off, with the exception of this one day here, where it came in still below 2 million shares. But you had on Thursday a fairly decent day in terms of volume. But take a look at the topping tail here on Thursday. That means that it was higher during the day, but sellers came in and sold into strength. That's a bearish indicator. So we might see a further rise in this market as we proceed into the elections, because the Federal Reserve has indicated that they will monetize the debt. You'll hear it on TV as QE2, a really cute name. QE2 is if it's like a baby chipmunk name. It's not dangerous. It is dangerous. It's very dangerous. You have the federal government that's buying our own debt. It's called monetization of debt. It's what the Weimar Republic did prior to the Nazis taking over, and it created huge amount of inflation in the economy, and it makes for political instability. It makes for economic instability. So you have the government that continues to print debt. It's as if, on a local basis, on a household basis, you get a credit card bill. You don't have the cash? Well, you go get a cash advance from your other credit card to pay that credit card off with. Have you paid anything? No. You're twice as much in debt. And that's exactly what we're doing now. It's scary, folks. It really is. But we acknowledge, we understand that this is what's being played, and we're going to position ourselves to profit from the results of what is going to happen. And more than likely, after the elections, you're going to see severe weakening in this market. Let's get to the trades that we placed to the long side. We made some money to the long side since our last my last commentary. Take a look at INTC, Intel. We bought it back here when nobody wanted it. We bought it back before that last video. We saw this key reversal here. We knew that this is an indicator, this bottoming tail here is an indicator that you had buyers back here, and there was support. So we added to positions, we opened the position, pulled back, and then boom, rallied higher. We took our profits last week, and that's it. We closed out this position. We saw this topping action get put in here. What you're seeing is volume drop off. It's not for us anymore. We made our profits. We're going to get out. GDX. We bought it back here, rallied higher. GDX is the ETF on the gold miners, the mining stocks. Nice little run. It broke trend here. We got out. We took our profits, head to the sideline. Look at the volume spikes, the red volume bars, as opposed to the black up volume days. When you see this, as an indicator to if you're long, to begin to scale out of your position, to get out, because you have more sellers than buyers. If we begin to build a base here and we see strength, meaning new higher lows, then we want to add back into GDX. But for now, we're out. We take our profits into the sideline. This is an extreme overbought trade. We used options for this trade. We used the October 130 strike price, and this is Ambev, Compañía de Bebidas de Americas. That's the name of the company. I love that name. But ABV, Ambev, as otherwise known. You can see here, with RSI above 90, we started building a position here, and I sent out an email to my members. Listen, let's begin to add in increments. Let's get short this by buying the 130 strikes out into October. We saw this breakdown last Monday. We took 2/3 profits off the table because the key to trading stocks like this is to respect them. Stocks that are extremely strong tend to stay strong. Stocks that are extremely weak tend to stay weak. Now, we did do a new trade here. I'm not going to discuss it right now because that's for my members. But we did open up a new trade here in Ambev. I'll discuss that with members this evening. And we're going to look to profit once again from Ambev, AMBV. So I'll discuss that with members tonight. What I would strongly suggest is that everybody pay attention to the XLF. The XLF has not participated in this rally. I strongly suggest that you pay attention to it. It is unable to close above its 50-week moving average. That's a scary result. And what you're seeing here is a possible head and shoulders formation get set in. Here's your left shoulder, head, right shoulder. If we see a breakdown below the 1326 level, look out below on the stock market. If you see a breakout above 15, well, that thesis is shot, and you probably see this market rally higher. So more later to my members on where we think this market's going to be heading. We're going to go over the economic data and earnings data that's set to be released. So far this quarter, we've had 83% of all companies come out and report earnings that beat the street. It's amazing. It's fantastic. Until you go back and take a look at what the analysts did. They lowered their earnings forecast. So did they really beat the street, or they just beat the analyst estimates? We're back in the 1990s way of doing things, meaning they lower their forecast. They come out and beat, rallies the market higher out of all the excitement. Wow, all the earnings they're making. When in all actuality, it's artificially lowered earnings estimates. So more later to members, folks, have a safe trading week. I'm going to be closing out the 14-day free trial offer soon. We're going to have the new website up and running. So if you want to take advantage of the 14-day free trial offer, please do so now. It's limited time, and we're going to be closing out that offer very, very soon. Have a great week, folks. Bye-bye.